In the last chapter, we learned to classify the market condition. Now we add the next question. Where has price reacted before? Support and resistance are not magic levels. They are areas where buyers or sellers have shown interest in the past. Once you understand trend, range, and structure, these areas become easier to read. The goal is not to draw perfect lines. The goal is to understand where price may respond, pause, reject, or break. The first rule is simple. Support and resistance should be treated as areas, not exact lines. Beginners often draw one perfect horizontal line and expect price to turn on that exact number. Real markets are usually messier. Price may trade a little above the area, it may trade a little below it, it may wick through it, and then return. Thinking in areas gives you a more realistic way to read the chart. Support is an area where price has struggled to continue lower. It is where buyers previously stepped in or where sellers became less aggressive. When price returns to that area, traders watch to see if buyers respond again. Support does not mean price must bounce. It only means the area has mattered before. The question is whether it still matters now. A support area is useful because it gives the chart a place to test. Resistance is an area where price has struggled to continue higher. It is where sellers previously stepped in or where buyers became less aggressive. When price returns to that area, traders watch to see if sellers respond again. Resistance does not mean price must fall. It only means the area has mattered before. The question is whether the market respects it, breaks it, or ignores it. Resistance is a test area, not a guarantee. Support and resistance form because markets remember important decision areas. That does not mean the market has a literal memory. It means participants notice areas where price changed behavior. Some traders may have entered there before. Some may have missed the move and are waiting for another chance. Some may be trapped and waiting to exit. When price returns, those decisions can create another reaction. This is why old reaction areas are worth marking. The cleanest beginner levels usually come from obvious swing highs and swing lows. A swing high is a place where price pushed up and then turned down. A swing low is a place where price pushed down and then turned up. These points matter because they show where momentum paused or changed direction. You do not need to mark every tiny turn. Start with the obvious ones if a level is hard to see. It may not be the level a beginner should focus on. Inside a range, support and resistance are usually the main story. The range low acts like support because price has reacted there before. The range high acts like resistance because price has reacted there before. The middle of the range is often less clean. This connects directly to the previous chapter. In a ranging market, price often rotates between areas instead of continuing in one direction. That is why the edges of the range usually deserve more attention than the middle. In a trend, support and resistance work differently. In an uptrend, support may show up near pullback lows, prior breakout areas, or zones buyers keep defending in a downtrend. Resistance may show up near rally highs, prior breakdown areas, or zones sellers keep defending. The level matters more when it fits the structure. If the market is trending higher, support that protects a higher low can be important. If the market is trending lower, resistance that protects a lower high can be important. Sometimes a level changes roles. Old resistance can become new support. Old support can become new resistance. This is called role reversal. For example, price may struggle below resistance, break above it, and later pull back to the same area. If buyers defend that area, old resistance may now be acting like support. The same idea can happen in reverse after support breaks. The important point is that the level is being tested from the other side. When price reaches a level, two broad things can happen. Price can react or price can break. A reaction means price reaches the area and struggles to continue through it. A break means price pushes through the area with enough strength to change the read. Beginners often decide too early. They see price touch a level and assume it must reverse. But touching a level is not the same as rejecting it. You need to observe how price behaves at the area. A clean break is when price moves through a level with clear intent. It does not pause at the area for long. It does not immediately snap back inside the old zone. It creates space beyond the level. This does not mean the break will always continue. It only means the level did not hold on that test. After a clean break, the next question is whether price can stay beyond the level and build structure there. A retest happens when price breaks a level and then comes back to test it again. Retests are useful because they show whether the market still cares about the area. If resistance breaks and price returns to it, the area may act as support. If support breaks and price returns to it, the area may act as resistance. But a retest is not automatically an entry signal. It is a test of the level. The reaction after the retest is what gives the information. Not every level deserves the same attention. A stronger level is usually obvious. It has a clear reaction. It connects with market structure. It is not buried inside messy, overlapping price action. A weaker level is often hard to explain. It may come from a tiny candle, a random wick, or a place where price barely changed behavior. For beginners, obvious levels are better than clever levels. If the level needs a long explanation, it may not be useful yet. One of the most common beginner mistakes is drawing too many lines. If every price is a level, then no level is important. A chart full of lines creates confusion instead of clarity. The goal is to mark the areas that actually matter. Start with the nearest obvious support, then mark the nearest obvious resistance. Then ask whether any larger level is close enough to matter. Most beginner charts can be simplified quickly by removing weak levels. You can judge level quality with a simple checklist. Is the level obvious? Is it recent enough to matter? Did price react strongly from it? Does it fit the current market condition? Is it close enough to current price to affect the next decision? These questions keep the chart practical. They also stop you from marking old levels that may be interesting historically, but not useful right now. Good level selection is mostly about filtering. The same level can mean different things in different conditions. In a range, support may be the lower edge of balance. In an uptrend, support may be the area that keeps higher lows intact. In a downtrend, resistance may be the area that keeps lower highs intact. This is why market condition comes first. Support and resistance are not separate from structure. They are part of the structure. The level matters more when it supports the story the market is already telling. A beginner workflow can be 4 steps. First, classify the market condition. Is price trending, ranging, or unclear? Second, mark the nearest obvious support and resistance areas. Third, watch how price behaves when it reaches one of those areas. Does it reject, stall, break, or ignore the level? Fourth, ask what would prove the level is no longer useful. This turns support and resistance from guesswork into observation. Here are common beginner mistakes with support and resistance. They treat levels as exact numbers instead of areas. They draw too many lines. They assume every touch must reverse. They ignore whether the market is trending or ranging. They keep trusting a level after price has clearly broken through it. The fix is not to make the chart more complicated. The fix is to simplify the chart and focus on the areas that price is actually respecting. Here's the chapter in one recap. Support is an area where price has struggled to continue lower. Resistance is an area where price has struggled to continue higher. Both should be treated as areas, not perfect lines. The best beginner levels usually come from obvious swing highs, swing lows, range edges, and important break areas. When price reaches a level, watch for reaction, break, retest, or failure. Most importantly, read the level inside the current market condition. Context gives the level meaning. The goal of this chapter is simple. Do not draw levels just to fill the chart. Mark the areas where price has clearly reacted before, then watch how price behaves when it returns. Support and resistance are not predictions, they are context. In the next chapter, we build on this idea with supply and demand.